Hey everyone, Misty Mackey here. Let's talk about something big that just happened in the economy and what that means for you, especially if you're buying or selling or building a home. Wednesday, April 2nd, President Trump officially announced a 10% blanket tariff on all foreign imports, a 25% tariff on cars, and a sliding scale for individual countries. And he called it a declaration of economic independence. But what happened right after? Stocks dipped, bond yields fell. And if you're in real estate, the last part is what you need to pay attention to. Here's the deal. The 10-year Treasury yield is a key indicator for mortgage rates. And when it drops, mortgage rates usually follow. And that's exactly what we saw. Housing Wire's Logan called it yesterday. He said, if bond yields continue to drop, expect mortgage rates to go down. And guess what? That's exactly what happened. Mortgage rates hit their lowest level all year. 6.63%, according to Mortgage News Daily. So does this mean cheaper mortgages are here to stay? Maybe. But what we need to do is keep an eye on a few things. Here's the question. Don't tariffs usually drive prices up? And isn't inflation the Fed's biggest fear? These are the questions we're getting, right? It's complicated. Howard Lutnick, the U.S. Secretary of Commerce, recently explained it like this, and I thought it was very helpful. Inflation happens when the money supply increases. Tariffs, on the other hand, they make foreign goods more expensive, but that's not the same as across-the-board inflation. Now, home builders are feeling the impact. The National Association of Home Builders, or NAHB, is already pushing for exemptions because builders rely on foreign-made lumber, steel, appliances, fixtures, and guess what? Some are already raising prices in anticipation. They're saying that some homes will go up by $9,200. Other economists, they say 4 to 6% increase, which could cost you an extra $17,000 to $22,000 per home when you factor in the inflation. So what's the sweet news? If you're looking at buying new construction, now might be the time to lock something in before those price hikes kick in. All right, what's next? Here's what I'm watching for. Number one, I'm watching for mortgage rates. If the 10-year yield keeps falling and today's job report doesn't shake the market, mortgage rates could keep dropping. And if we break below 6.6, demand's going to spike. Number two, builder confidence. High construction costs are a challenge, but if rates drop far enough, we might see buyers jump in and this might balance things out. Number three, a risk of retaliation. If other countries respond with their own tariffs, we could see an economic turbulence. And this could scare investors, disrupt supply chains, and maybe get more volatility. The bottom line is we're in uncharted territory, but if you're buying or you're selling or you're building, you need to stay ahead of the ships. And I'm tracking this closely and I'll keep you updated. If you're thinking about making a move, let's chat. I'm going to help you navigate this market with confidence. So hit the like button, subscribe, and let me know in the comments, how do you think the tariffs are going to impact housing? Let's talk about it. Let's chat soon.